Welcome back, guys. Today I will be talking about Tesla. So, this is the third video that I'll be making about Tesla on this channel. And essentially, let me just recap what I said in the previous two videos. I basically said that Tesla at that current price was overvalued, even when um, put in certain future expectations and things of that sort. I made this video when the stock was around $400 a share, and then I think I made another one when it was around 470, 480, and since then it's just completely spiked up to over $700 a share. So I would like to talk about whether or not I was wrong about Tesla, or if I'm ever going to buy into Tesla even at these high valuations. So to keep it, short and sweet, in terms of my knowledge about Tesla, I believe I have a good understanding on what they do as a business and how they can grow in the future, right? But you have to understand that Tesla, at the end of the day, it's a tech company. I agree with that, but it's also a manufacturing company. Their main revenue staple is through cars. And historically, manufacturing in general has had a low margin. So you can't compare a Microsoft or a Shopify to a Tesla just because of the margins, right? Unless Tesla can figure out a way to lower their margins so much, like where you're getting more than 20% margin per car, then yes, the price can maybe be justified. But it's been over 100 years since the first car was invented, and in 100 years they couldn't find ways to lower the margin for cars. Like you have Fiat, GM, Ford, Toyota, Nissan, Honda. None of these companies can find a way to lower the total margin cost for a car. How can we expect Tesla to do the same? So now I was just trying to understand if it's possible or not. But as you can see, it's only gone up in the past year. It's up around 730%. And yeah, I actually own Tesla shares before it was pre-split around 190 $200, so it's around 44. And as soon as it hit like 80, I just sold out. I was like, yeah, it's way too expensive. But since then it's completely spiked up to $700. I've been in this market for a couple of years now, and I would say Tesla is one of the more surprising things I've seen. I've seen stocks jump thousands of percents in a week, but seeing a big market cap like Tesla, jump from 50 billion to 700 billion is something unheard of, even like to normal investors, which is kind of crazy. On this account, I tried to play Iron Condors, but I failed. But the main point I'm trying to say is that I still think Tesla is going to go down. I think they will continue to innovate. I love the company, but I don't love the stock. I still think that Tesla in the next 5 years, if everything is still online, like on pace, they'll still I think they'll go to around 300 $400 a share, right? But then after that, you don't know where they're gonna go. Unless they start having other streams of revenue, such as their solar capabilities or um, EV charging stations, then maybe they might have different sources of revenue. But still, all these are very, very low margin types of businesses. So just be very, very careful, because I see a lot of posts, people putting millions of dollars on Tesla stock at $700 a share. It's kind of crazy, right? But that's my basic analysis of what I think is going to happen to Tesla stock in the next 3 to 4 years. I think it's going to dip easily, $300 $400 in the next coming years. But I would not short the stock. I've made mistakes shorting other stocks in the past. I tried to short Zoom at $200 a share. I blew past $400, so that was 100% loss right there. I tried to short Overstock, which was at like $40 a share, and then went up to 100. But there've been other successful shorts I've had before. But when you try to short like a growing and fast company, it's pretty difficult. And now let's talk about some of the news pieces specifically to Tesla, which caused such a big bull run, and why I think it may dip in the future. So, one big news that came out of Tesla from my last video was that the Tesla got approval to join the S&P 500, which was a huge, huge game changer. That was one of the main catalysts on why Tesla jumped from $400 to around $600 plus. I remember that day specifically, it went up like 18 and 19%, which was really, really crazy in my opinion. Tesla was trying to get into the S&P ever since it qualified. After earning 4 quarters of profits, it was eligible to join the S&P since it was an American company and it met the $3 billion market cap requirement. So since then, I think Tesla was ranked around 15th in terms of market cap. Right now it's 6th. So Tesla is currently the 6th largest company in the US, and I believe it's around 11th in the world, which is really, really crazy to think about because this company was not profitable 2 years ago. So why is a company like, why is Tesla, I'm not hating on Tesla, but why is Tesla so much more expensive than other growth stocks? I'm talking about growth, not like, I know there's nothing like Tesla out there, right? But there are competitors, but I know they're not competing with Tesla, right? But why are there other companies not valued at Tesla's valuations, right? Even though manufacturing itself is a low margin industry and their auto software, the self driving software costs a lot of money for Tesla itself. It is estimated that Tesla only makes, 5 to 10% on their self driving software. So if they're making such low margins on their software, imagine their margins on, on car manufacturing. And even if they sell a lot, that still doesn't justify Tesla's valuation, right? So if you see right here, we have Amazon, Facebook, Microsoft, Alphabet, and Apple are the biggest companies. And these are, even at such big valuations, 2 trillion, 1.6 trillion, 1.7, it can be justified because these companies have been earning profits for so many years. Amazon made like $10 of profit per share last year. Apple made $4 per quarter of earnings per share, and Tesla makes a dollar per share for their earnings, which is really, really crazy. I think it's very, very crazy. This is before the rally, so in May 2019 was worth 32 billion, right? And since then, their earnings have only jumped out, I would say, from negative 64 cents to around $1.28. I would say that's a pretty decent jump, but it doesn't justify such a big jump. And especially what industry Tesla is in. Tesla is in an industry where it's been low margins throughout, right? So that's why we see Toyotas, Hondas, Nissan's PE ratios below 30. I understand that it's a new stock, but again, you have to price it in more reasonably. The thing, also one thing I think why Tesla is going up so much is that Tesla, when people buy Tesla, they don't sell out. So I think that creates a lot of demand because okay, there's 100% shares available. 95% of the shares, the holders of those shares will never sell until like 20 to 30 years out. So I guess a lot of people keep having demand for those 5% of shares, so they keep going up. Like I've seen days where there's no catalyst and it's up like 7-8%, which doesn't make too much sense in my opinion. Now let's talk about another piece of news and whether or not I'll be buying this stock. So the other big piece of news that came out from Tesla after I made my last video was that they are focusing a lot in their international business side, especially China. They're offering the Model Y, Model X, and the Model 3 in China for discounted rates. So this actually happened for the Model Y. This happened a couple of days ago, actually, where they lowered their price pretty dramatically. It was I believe it was at 52,000 and then they moved it all the way down to 42,000. So that's a pretty sizable discount for a Tesla vehicle because Teslas new don't really go on sale too often. So they're trying to boost their sales outside of the United States, which makes sense. As right now China is the biggest market for electrical vehicle consumption behind uh, the United States. So I really like what they're doing here. They're focusing, a lot outside of the U.S. And that's how you grow your business. Toyota and Honda, the number one and number two car manufacturing in terms of car production in the world because of this. You'll see them in the Middle East, Europe, Asia, United States. So more of a more of an international player, which is good for Tesla. One thing that does concern me a little bit about Tesla is whether they can sustain this. You know, sustainability for international places is very hard. Toyota backed out of many countries, and they ran massive losses because they couldn't, accommodate. They couldn't, in a viable fashion, they couldn't produce at such a low rate. For example, India and China has a much lower standard of living in terms of the average paycheck compared to the EU or the US. So even when you lower it to like $42,000 for a car, that may not be affordable to that many people compared to the EU or the US. So that's what they have to keep in mind. If they can, find a much lower car, cheaper car, which they've announced, the last earnings, they're trying to build a $25,000 car, which I think if they can do that successfully with high margins, it's a great thing for Tesla. But there's so many ifs and buts about their car manufacturing that in terms of their valuation, it doesn't make too much sense. So in terms of whether or not I'll be buying this stock, I won't be buying the stock, I would say, unless again you see a dramatic correction in the market where you're talking about 50, 60, 70% plus, which I don't think is going to happen. In terms of recommending people to buy this stock, to be honest, most people don't know what's going to happen for a particular stock. I've always said I'm not going to short Tesla, but I'm not going to buy at such rich valuations, right? Berkshire Hathaway, one of the most cash intensive companies in the world, most of the time they're always correct, right? And they've been doing this for 5, 6 decades. They're worth the same as Tesla, really? I mean, I understand the growth possibilities, but how much more growth can you get, right? Even if you expect 100% returns, that's 600 billion to 1.2 trillion. That's like uh, near Microsoft valuation. So that doesn't make too much sense. So there you have it, folks. I'm not invested in Tesla, nor will I invest in Tesla, but I'm not shorting the stock because I've learned my mistakes when you short growth stocks. Uh, so was I wrong about Tesla? Time will tell, but I was wrong probably for this year. I thought by the end of the year we would get a correction, but I'm saying eventually the market always corrects itself. So give it 5 years, I would say, then you'll see a correction to the downside around. It'll settle at around $400, I think $300 eventually. All right, guys, thank you for watching. Please let me know what you think down in the comments, and have a good day.